Good morning, all. Ira Epstein of Linn Associates with your morning flash update for this Friday, the 21st of June, first day of summer, by the way. And it is just now, 9:25 a.m. Central Daylight Time. So as you can see, a stable stock market, which is different. We haven't had that in a while since the Fed announcement, since the Iranian attack on a U.S. drone. The gold market got up and is down $20 off the high of the morning. Part of that has to do with the fact that the U.S. did have plans to attack Iranian assets. The president at the last minute called it off. Don't know why, don't know what he sees or doesn't see, but whatever he did, he's the commander-in-chief, and that took the tension way down. Imagine if you hit Iran, don't know where the tit for tat ends. Dollar index a bit lower. Market's still thinking the European Union needs to do a lot more in the way of stimulus and possibly quantitative easing. If you look at the grain markets, it's a weather market, so every time you look at the weather chart, you see something different. However, remember, the prevent plant is, for all purposes, done in the corn market. Soybeans, now that date's rolling right at us, and as we get to that date and things begin there, each day that a farmer doesn't plant, he either has a choice to declare no planting, or if he decides to plant, he drops on some of that insurance he could get. So big decisions have to be made what's going on in there. On the energy sector, look at this sharp rise that we're seeing right across the bow of the energies, and this has to do with still fear. Now, airlines all over the world, they're not going anywhere near that zone. They're taking their planes elsewhere. I heard, though, the piece of news that I wanted to hear. India is sending 2 of its warships to do escort and maritime work in the Gulf of Oman and the Straits. Why? Because they buy oil from that area. And this is what I had been talking about on Fox and other TVs. It's time for China. It's time for countries, Japan. Those that get the oil out of the Straits got to join the U.S., and they have to start doing more in that area to ensure that the tankers get through. That gives Iran a new problem. We're the big enemy, but what happens with that part of the world if they ship one of their buyers that eventually they're hoping to get back? They don't need that problem. Just pointing out the obvious, and that's how I'm reading it. So as I'm looking at the market here, market groups, U.S. preliminary June manufacturing and service sector PMIs came out, and the service sector PMI 50.1, just barely showing growth. They expected 50.2. 50 is the number. May was 50.5. The service sector manager PMI 50.7. They expected 50.9. This is the important part. The manufacturing PMI is at the lowest level since September 2009, while the service sectors is since 2016. At the same time, there's good news because as interest rates are dropping, what I had thought might happen, and it still could happen. I thought buyers, after watching rates drop, eventually would start the refinancing. Now that the Fed signaled that it might go even further down, I question what's going to happen. But you're in the heart of this time where people buy homes. Got to locate for the kids, got to get everything ready for the school year. Existing home sales up 2.5%. That was a good number. 5.34 million. They expected 5.25 million. Prices still going up. They're about 4.8% over a year ago and about a 4.3-month supply of homes. So that part of it's good. But as I wrote in my report last night, one of the things I'm concerned with, if you're going to go out and buy a big item, a home, and you feel that your mortgage can fall further if you just wait a little bit because the Fed is signaling that yields might drop. And of course, if you look at the 10-year note, while today it's putting bids back into the market, it had gotten under 2%, and people lock in these low rates. So they have to decide, do they want that home right now? I discussed that and a lot more in the mornings. This morning, yesterday morning, I get up every morning in the neighborhood of 4:35, read the world events, see what's going on in Asia, Europe, what reports are coming in for the U.S. Then I start recording a video that looks just like this with a black screen. I am not in it. I'll review 40 charts and 5 ETFs typically. And in that, I'm hoping that you come to the table, have your cup of coffee, whatever, get ready, and I'm going to cover all these different sectors. And I'm going to do this in this exact manner each and every time, the same way. So you get used to, and you can pull your cursor, and wherever you move it, it's going to light up and say metals, meat markets. It'll say soft, so you know where you're at. Plus, there's a lexicon on the other side, so you can catch up with it at any point that you want. The difference between that morning video and what you see here is I can offer specific buy and sell ideas. I can say buy here, sell there. Here's what I want you to do. Here's your stop order. This is what you look at. I can't do that in these general videos, just not allowed by the government. So I have another way of doing it, and I do charge for that. So if that turns you off, okay, but it's 26.5 cents a day. Not very much if you haven't tried it, and certainly